Assalamu alaikum. Good morning, good afternoon, and good evening, everyone. My name is Reda Amrani. I'm a petroleum engineer, and I'm here with you today to discuss how to harness the power of digital to navigate the energy transition. But before we start, in case you're wondering, what does a petroleum engineer have to do in a digital conference? Well, I also share the same curiosity. But being with you here today denotes one important aspect, which is the fact that digital solutions and digital disruptive technologies are transforming many different industrial sectors, and the energy industry is no different. The strategies are being reshaped, the operating model are being redrawn, and all of that is enabled by the availability of cutting-edge, digital-based, innovative technologies. So in this presentation today, we're going to try to answer three main questions. Why, what, and how? The number one question is, why is the digital transformation impacting so many different sectors? Well, the energy industry is operating and is being reshaped by so many different driving forces. They all fall under the main four pillars, which are summarized here. On one side, you have an evolving operating ecosystem. On the other side, you have the advanced technologies that have been developed in recent years. And then you have other significant fundamental changes on the microeconomic and the microeconomic scale. And all of these driving forces combined together are further embedding the impact of the digital transformation to reshape the energy transition and making it thrive through the energy transition. So let's look at these four pillars one by one. Number one is the changing technologies, or the evolving technologies that are readily available today. A lot of these technologies were specifically developed in scientific labs for very specific applications. Let's take the blockchain as an example. So the blockchain was there to support the development or the implementation of cryptocurrency. Today, blockchain are utilized in so many different other applications to manage end-to-end transactions in a completely decentralized manner and bring about more efficiency, more decentralization in those economic transactions. Advanced analytics, 3D printings, Internet of Things. Basically, wherever you have vast amounts of data that have been acquired, that are sitting in data stores and servers, combined with the availability of superior computing powers, of cloud computing, all of these ingredients combined together are making those cutting edge technologies that were maybe very selective when they were first developed, becoming more mainstream, more democratized, and more affordable. You can see the cost of these technologies has significantly dropped. The cost of bandwidth, the cost of sensors, the processing power, the cloud computing, they're becoming more affordable. And large companies and small independents can now afford to leverage these cutting-edge technologies in order to deliver superior productivity, accelerated decision-making, better quality services and products, more informed decision-making, and most importantly, cut costs or eliminate unnecessary costs to remain competitive. Next is the changing operating ecosystem. So what was traditionally the industry that was traditionally dominated by conventional oil and gas companies that we're all familiar with, we're now witnessing the emergence of new players entering the energy industries. And those are predominantly technology companies like Google and Apple and Tesla and GE. They come from different industries, but they found out that they can expand their business model into a new industry territory altogether. So they are penetrating the oil and gas, they're offering new products and services, and they're also forging new alliances with traditional conventional companies. We read in the media almost on a monthly or a weekly basis, new alliances between giant oil and gas companies and big tech companies as well, Microsoft and Google, for example. The demand or the demand model is also, or power consumption model is also changing. Societies and consumers are demanding more power, more energy, but more energy, more eco-friendly energy sources. So there is a visible shift today from hydrocarbon-based type of energies to electricity or renewable sources-based type of energies. There's a shift in the demographics. There's increasing, growing populations in emerging countries and emerging economies, but also the consumer behavior is now significantly changing. So how do these operators, energy companies thrive under these changing and shifting ecosystem is really by leveraging the power of digital to better understand the market, better understand the trend, and better predict the future. On the macroeconomic scale, a number of driving forces have been hardly impacting major oil and gas companies. In recent decades, for example, the oil and gas reserves have shifted and now are sitting in the hands of the national oil companies. What it does, it actually pushes the international oil and gas companies, whether major or independent, towards the more complex, the more expensive, the more technologically challenging, and the maybe less profitable oil and gas fields and place to develop. The energy industry has also been heavily pounded by the oil and gas price volatility. In recent years, that volatility has accelerated. In the last decade, for example, oil prices have peaked to 140 and plummeted to $25. And it causes a lot of disruption, a lot of uncertainty to oil and gas operators to decide what to invest, when to invest, whether the investment proposals are still economic, and at what oil prices. There's also a changing regulatory framework and policy framework that's forcing companies now to propose more decarbonized energy sources, shifting away from the traditional oil and gas and maybe possibly coal to less CO2 intensive energy solutions. Civil society's behaviors is also changing, and civil society is now demanding more energy, and again, more decarbonized, less carbon intensive energy solutions. They are demanding and they are imposing that. And the policies are also following that demand by imposing new carbon taxes. And finally, the global economic recession that the world has witnessed, and a slowdown in economic growth in emerging economies in China and India, has slowed down demand, therefore putting more pressure on energy companies to remain profitable, to reduce their costs, to maintain profitability under dwindling oil price circumstances. And then finally is the changing microeconomics. The oil and gas sector that was traditionally highly profitable industry, 16% was the total shareholder return back in between 2000 and 2007, has now plummeted to negative 9%. And what it means is that investors and banks are now moving their capital away from the oil and gas sector, or maybe favoring other industries and other sectors that are becoming more profitable. You can see at the top of the list, the IT and maybe big tech companies are now becoming the go-to industry for most investors to maximize their returns. A quick comparison between 2009 and 2019, we see how the top 10 companies in the world by market capitalization has significantly changed. We had 4 oil and gas companies or energy companies in 2009, top 10. None of them exist in 2019. It's overwhelmed and dominated by big tech companies. So there is a visible shift now in the market where investors are favoring other industrial sector. And what it does, this trend imposes more pressure on energy companies to become more nimble, more competitive, and demonstrate that they can retain profitability under plummeting oil prices. So they need to demonstrate that at $40 barrel, they can remain profitable. So today, oil and gas companies have to rebalance their portfolio, focus on the low-cost barrels, the low-cost production, eliminating the complex, the expensive assets to operate and to develop. And that prioritization needs to be done by incorporating a large number of ranking criteria and assessment parameter that can only be delivered by the power of digital solutions. Let's look at the what. What is actually changing in energy transition, and what's the impact of digital solutions? Okay, so we talked about how the oil and gas production systems or supply chain is becoming more international, more complex, more risky, facing higher uncertainty, where margin for errors or room for errors is becoming thinner, profitability is becoming even thinner. So companies to stay profitable and to remain afloat need to focus, need to devise strategies and end-to-end operation optimization strategies that deliver continuously higher operational efficiency. They need to make faster decisions. They need to make a decision that deliver cheaper products and cheaper services and better informed decision making. So on one side, you have the increasing complexity. You have a growing equation with so many different unknowns, so many different moving parts, from one end of the spectrum, which is the oil and gas producing wells, to all the way to the retail and to the sales point, with so many moving parts in between, that's becoming almost impossible for the human brain to be able to optimize that such a complex supply chain and be able to unlock all that potential, eliminate waste, and automate the decision maker, not just in days or in hours, but in split seconds, in order to avoid unnecessary cost and remain competitive at all times. How is the digital solution helping companies, oil and gas companies? Well, there is a large degree of disruption, and businesses and processes are being fundamentally disrupted and changed, optimized, boosted. Let's take these just three examples, but the range of application is much wider. In the subsurface and well digitalization space, today subsurface engineers, reservoir engineers, geoscientists, and production engineers are able to come together in an integrated manner. They're able to integrate all the data sources that they usually analyze in silos and build a fully integrated digital twin of the subsurface reservoir. And based on that, they can test different development strategies and evaluate different outcomes and really focus on those strategies that maximizes return, that can yield better production recovery at the lower cost. They can do that in an integrated manner. They can see the impact and the outcome of their decisions in real-time manner. They can test so many different scenarios before they even implement them. They can semi-autonomously interpret a vast amount of data. So seismic data, which traditionally generates a massive amount of data from seismic activity, can now be automatically pre-interpreted for engineers to utilize. So less time is now being spent on the data mining and the data processing and even the interpretation, but utilizing the conclusions of those interpretations and in building complex decisions and development plans is what the digital solutions are enabling engineers to achieve. The data centricity is becoming key here. So rather than engineers working in silos and handing off reports and documents from one another, data is being centrally located in data universe centers where different disciplines can intervene and can use bits and pieces of the subsurface data depending on their interest, depending on their area of intervention. Where the data remains as a single source of truth, eliminating risk of duplicating data, eliminating risk of error as well. Autonomous drilling, we have an example we'll see next, is being also enabled by machine learning. On the asset management, if you take a fully integrated production system view, today operators are capable of not only respond to failures and address them in a quicker manner, but also be able to build machine learning based or driven models and algorithms that can predict failures before they occur. So these algorithms can analyze trends, can analyze operating parameters from machineries, from compressors, from pumps, and they can predict deviation from optimum operating envelope, and that could lead to potential failures. So and engineers and operators can take immediate actions to prevent that from happening. Real-time optimization, when you have a very complex production system made up of different production nodes, wellheads, wells, pipelines, tanks, vessels, processing facility, it becomes really, really complex for a single person to optimize all of that. So being able to identify those bottlenecks along the network, along the supply chain, being able to debottleneck them immediately, or even predict those future restrictions based on the production forecast. That's the real power of digital that wasn't available for engineers to make maybe 5-10 years ago. And again, on digitizing processes, many of the routine, the mundane tasks that are time consuming are today being automated. The implementation of NLP, natural language processing, is helping support staff to automate many of their tasks, be able to extract knowledge and understanding from vast amounts of reports, vast amount of documents, in order to help them deliver faster decision making and focus on the pain areas without having to waste so much time on the data mining and reading and scanning through massive amounts of documents. Real-time supply-demand balancing. Today, you could connect petrol stations, sales volume, all the way to the refinery. So you have a fully integrated network knowing exactly at any point in time how much products are being sold, petrol, fuels, you name it, are being sold to the end customers in real time, so that upstream of that supply chain, adjustments to the production rates can be made in order to cope with spikes in demand or reduction or drop in those demands. The whole objective is to minimize waste and avoid overproduction or undersupply. Smart contracts, we talked about the blockchain, for example. Blockchain is now utilized to manage international oil and gas sales contract between different parties, and commercial insight as well is becoming very, very important. It's moving from one end of the supply chain to the production center in a real-time manner to make those on-the-fly production adjustment decisions. Now, on the drilling operation side, a common issue that affected the drilling operation for many years was the stuck pipe. So drilling engineers drill through hard rocks or underground reservoirs. Due to many different parameters or different causes, the pipe gets stuck, causing delays, causing downtime, and causing unnecessary. And again, you have a combination of factors or reasons or causes that can impact and can lead to that stuck pipe situation. And for years, drilling engineers have been grappling with that problematic and how to link these parameters to the probability of stuck pipe, how to build that causal effect relationship. There's no analytical equation that can do that. Only machine learning based data-driven models can deliver that kind of insight that calculates in real time the probability of stuck pipe, given the vast amount of historical data that has been acquired over the years. And again, that's also enabled thanks to the cloud computing, the vast data transmission infrastructure that's today built, and the availability of all kinds of sensors that are embedded in the drill bit, on drilling rigs, all over the drilling operation that feeds real-time data for many years that provides fertile ground for applying machine learning algorithms. So next we'll look at the Algerian situation and economy. How is it being impacted? What are the threats and the opportunities that lay ahead of us? So as you know, Algerian economy is heavily anchored on hydrocarbon sales and export. What happened in recent years is that oil and gas volumes available for export have been dropping due to the natural decline and depletion of our oil and gas reservoirs. But at the same time, there's a growing demand linked to the growth. So that leaves a reducing amount of net export volume. And if you add on top of that the dropping oil and gas prices, that leads to a reduction in oil and gas export revenue. So it's a really challenging situation to face for the Algerian economy. And the solution could be enabled by digital solution. The question here is, how do we make sure that we preserve as much oil and gas volumes as possible? How can we ensure that we produce enough energy to satisfy national demand and be able to export more volumes for our internationally? So the complexity of the problematic here between how to align between supply and demand on the electricity is illustrated very well by this example, where we have a maximum production capacity of nearly 21 gigawatt. Yeah. However, the highest production, or the peak production, consumption peak on the hottest day is 15.6. So there's a big mismatch in between. There's an oversupply of electricity that leads to overconsumption of feedstock gas. If we were able to leverage the power of digital solutions by changing the outdated passive units to Internet of Things equipped smart appliances. So what stops us from having Internet of Things equipped electricity meters and maybe AC units that can in real time measure the power consumption, send it to centralized servers that are powered with machine learning algorithm that can analyze in real time consumption trends of electricity and trying to predict in real time future trends of consumption so that electricity consumption production is matched to the demand in order to maintain constant supply of electricity and energy security, whilst minimizing waste along the supply chain. So really trying to balance supply demand in a real-time manner in order to have more available hydrocarbon products for export. Another example where we show how high-resolution satellite imagery combined with the power of image processing, pattern recognition, cloud computing enabled a company to immediately detect a significant methane gas leak in the middle of the Sahara. As you can see, in January 2020, there was a main gas leak developed on one of the gas lines, and thanks to the power of image processing available from high-resolution satellite, tomorrow the drone footage can supply those images, and combined with high computing power image processing algorithm, companies can actually detect in real time those events, and they can flag them to the right operator to take necessary action. As a result, you can minimize the flared gas, or you can reduce fugitive gas. There are a complete waste to the gas volumes available for sale. So less leaked gas from our facility means more volumes of gas available for exports and more revenue for companies. So these are just two examples, but of course the range of applications is much wider, and we can talk about that endlessly. So in the end, I want to finish with maybe some advice on how we can achieve a successful digital transformation in the energy sector in our country. So some of the ingredients of success, I'd say, are maybe focus on people, process, and behavioral changes. These are equally important as much as technology. So the digital transformation is not just about transforming technology solutions, but also changing people's mindset, changing the behavior in our corporate world and the processes. Trying to become more agile, accept maybe failure, but be able to bounce back and fail fast and learn quick. And rather than aiming for the perfect strategy from day one at a large scale. And also start small with small pilot projects that focus on specific business cases. And from there, from those successes, think about upscaling it, scalability to the larger on the larger level. And then finally, focus on the business case versus the technology, trying to identify those business case and the problematics to tackle before thinking about the technology solutions. And then finally, listen to the users, listen to the end users of these technologies, people who are impacted by these problematics, by these issues, because they're also part of the solution. And with that, I'd like to thank you for your attention, and I'm willing to take any question you may have. Thank you very much.